lot of the realtors out there, and I've been teaching this TRID, and if you don't know what TRID means, it's TILA RESPA integrated disclosures, and what we're going to be seeing is some disclosures are changing. The process doesn't necessarily change, but I think what realtors need to know is the sky is not falling, and this isn't the end to the real estate business. It is definitely a change, and we're going to go through what those changes are. But more importantly, what does it look like? Why is it different from one lender to the next lender? And everybody kind of wants to do it a little bit different. Some lenders want to take more ownership of it. Some want to, they don't want it to change a whole lot more differently than what it already is. And so we went through the change in 2010. Why on God's green earth are we doing it again? And so there's a lot of misleading information. There's a lot of unhappy people out there, but man, I'm going to tell you that what I'm going to present to you guys today is going to really dumb it down and simplify it and let the realtors know what they need to know, and really give them a real simplistic, clear understanding of what we're doing. Okay, so the first one is what we're doing is we're combining some disclosures. It is without question, Scott, it is confusing to the consumer under the current process. It's always been confusing. I've been doing this for 12, 13 years, and it's always been confusing. The good faith estimate, the truth in lending, that stuff isn't a real easy form for the consumer to read. They see an APR, they see that they're buying a house for $150,000, $200,000, but they're paying $400,000 for it, and so they're just like, what does that mean? They think their interest rate is their annual percentage rate is their interest rate, and it's not. And so we're really going to simplify it. So the loan estimate is something that's going to be disclosed from the lender's standpoint. Okay, so now what we do now is we disclose a good faith estimate and a truth in lending. Client comes in and signs their loan disclosures, or they sign it electronically. Those are two forms that they have to sign every time. The loan estimate is the new form that's going to be signed, and it has the terms and the cost of the loan. The actual closing costs are on there, and and have it in touch with the loan officer, and it's just got a little bit more detailed information. And it's something that has to be disclosed to the consumer within 3 days of a completed loan application. Now, this is really big, and man, every time I give this class to a group of realtors, they always ask me, this has come up several times, well, what is considered an application? Because a lot of applications are what? We think, and realtors think too, and a lot of us lending guys, have believed that an application is them going to my personal website or their lender's personal website and filling out an online application. Now, that's what that is, but that is not the definition according to, the consumer CFPB. That's not their definition. The definition in the mortgage banking industry is an application, or is considered a true application when we have these 6 things that are listed at the bottom of this PowerPoint. It's the consumer's name, income, mortgage loan amount, social security number, estimated value of the property, and the ding, 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 number 6 is the property address. So when do we traditionally have a property address? Well, we have a property address whenever we have a sales contract. So a sales contract a lot of time is going to trigger a full and complete and legitimate loan application, and at that point is when the loan estimate has to be disclosed within 3 days. Make sense?
Got it. It does make sense. And there's a word that somebody come up with, and I don't know who shared this with me. I think it was, but it's alien. And another word for alien would be, I believe it kind of goes over these 6 things. So we'll cover that later. But alien has to do with the 6 things or 5 things. I don't know how many. I can't count letters, but how many letters are in that word? It constitutes what you're talking about here, the actual application. So this is kind of important when we talk about getting approved for a loan. Like what actually takes place in an application and what it actually triggers TRID is what you're saying here. Is that kind of what you're saying? Like TRID really doesn't take effect until you have these 6 things.
Exactly. Yeah, it doesn't take effect until you have these things. And I just don't, there's just been a lot of confusion. Well, what is, so you're saying when they fill out an application, you have to know. That's not what I'm talking about. Loan applications have 6 things. Yeah, absolutely.
Okay.
Okay, go ahead and go to the next form, the closing disclosure.
Okay.
So the form, the closing disclosure, this form is basically going to combine and replace the HUD that we see now. So when we go to the closing table, we see the HUD 1 and then the final truth in lending disclosure, okay? And the closing disclosure must contain the actual terms and costs of the transaction. And I'm telling you, man, if you haven't seen one of these and they're at the end of the PowerPoint, I would definitely recommend going to Google and just Googling closing disclosure and get a copy of this. And just look at it. You can also go to the CFPB website and get an example of one. That's where I believe I've got mine. And man, it is such an organized form. And I'm going to tell you, man, I really like it for the consumer market. I like it for us real estate professionals because it's so much easier to read than what the HUD statement is now. Is it different? Absolutely. And no one likes change, and therefore we don't like it because it's different. It's not what we're used to. So we do have to retrain our eye on how to look at these things. But once you look at it, I think, and accept it and embrace it, there's no doubt in my mind that it's a more organized and form to be able to read, not only for us but also for the consumer. But the reason that we're replacing it is because the CFPB wants a way to improve the borrower's understanding of the closing costs. They want to make it easier for them, and they want to protect them. Okay, so it discloses a lot of things in a lot different way than what we see in the closing disclosures today. So moving on to the next one, the current process is, Scott, is like we provide a good faith estimate when they come in and sign their disclosures, and we disclose the truth in lending to them, okay? And it's just confusing. It's just confusing for the consumer because, I mean, whenever, like, when I sit down and have a borrower sign their disclosures, they always ask us every single time, well, what is the APR? I thought my interest rate was, 3.75. Why does that say 4.125 or 4 point whatever? And so that's the cost of measuring the loan for the first, first year with the fees, and you explain that to them, and you still get a deer in the headlights look. So,
right.
so what we're going to see is we're just going to see a more organized loan estimate in a that identifies the specific property and all of the information that they need as far as the fees listed. They're in alphabetical order, and then they have like subcategories. Okay, so the realtors won't ever see the loan estimate, except maybe at the closing table they may see it, but this is something that's just between the actual lender and the consumer. It's a 3-page loan estimate. It has the loan terms, the projected payments, the closing costs, and then the closing details. And we're going from, I don't know how many pages we have now. I'm gonna guess and say between a truth in lending and a good faith estimate, we probably have 7 or 8 pages, and so it's going to simplify down to just 3 pages.
So, because I know, Kenneth, right now there's 4. Like the good faith is 4 pages, which was the craziest thing that I think ever happened in the mortgage industry because none of it makes any sense, and it doesn't even tell you a PITI, which is principal, interest, taxes, and so it doesn't even tell you a true payment. You got to go to another page for that. So what you're saying is it's going from where it was to 1 page that actually simplifies everything like it used to be?
Well, it's going to be 3 pages total. The loan estimate would be 3 pages, but the information, but it's going to have all the main information on one of those 3 pages to make it really easy. I can tell you the last page of the loan estimate now, it has like a comparison section of that says in 5 years, this is how much you've paid, and this is how much of it went to principal. It's going to have the annual percentage rate. Out next to it, it says something along the lines that your cost over the loan is expressed in the rate. This is not your interest rate. It tells them, instead of me telling them and them having to trust the lenders that they're telling them the truth, it says it in writing. So it just simplifies. And then it has like another example. It has your total interest percentage. Well, when you buy a house, if you've ever looked at a truth in lending disclosure, it says like you financed 150 and then you're paying $299,000 after the interest. Well, it doesn't really tell you what percentage of interest you're paying. So now it's going to say, well, now your interest that you're paying on that property is 49%. So they're trying to educate the consumer market to say, hey, you're paying 49% in interest over the life of this loan, whether it's, the example that they use on the loan estimate's a 30-year mortgage. But man, think about that. If a consumer knows they're paying 49, and we're going to see them as high as 69, 70% in interest, think that the consumers are going to be like, golly, man, I'm paying a lot in interest. Maybe I should consider paying this down a little bit faster. And so they put together better. So it's just educating the consumer a little bit more so that they can make proactive steps to making getting that mortgage paid off a whole lot sooner. So
what you're saying is you're going to make the when people were in the business when the interest rates were in the teens, this is going to those are going to look good again, is what you're saying.
Yeah. Well. Yeah. I don't think that.
Yeah, I'm just joking. I'm joking.
Yeah. I don't think anybody wants to pay 50 or 60% interest.
I know.
Certainly, yeah. Certainly want to know.
Right.
Hey, what's
Right.
better?
Exactly. Right.
But moving on, so the current process, like I just mentioned, is the good faith estimate, the TIL, and basically we're just going to see the loan estimates disclosed, and then we're going to see this closing disclosures closed. And this is the thing. Everyone's talking about, well, the closing disclosure has to be disclosed to the borrower 3 days before we close, and it cannot change after that. And I think what I hear a lot in the market from a lot of the realtors that I deal with is like, well, what do you get, like, in today's lending environment? Like, if something changes, I've heard some comments, well, what are you going to do when October 1st rolls around? We're not going to be able to this isn't going to be possible. And there's just a lot of confusion out there. That's not necessarily the case. I can tell you right now that when we issue a good faith estimate and a truthful lending disclosure the very first time when the borrower comes in, I know, I'm telling you how my office does it, and I'd venture to say most of the lenders are doing it this way. We lock the loan, we disclose to them, and then we go to the closing, and then we just send it to processing. Nothing's changing. As long as you have all of your fees and everything in there accurately, and it doesn't surpass the 10% tolerance, nothing's changing anyway. So this closing disclosure being disclosed 3 days before closing, it doesn't necessarily have to be disclosed 3 days before. And so everybody's like looking at calendars saying, okay, so we need that closing disclosure disclosed this day so we can close according to the contract closing date. We're going to be sending out that closing disclosure. You can send that closing disclosure 2 weeks before you even are supposed to close according to the contract, right?
Okay.
It doesn't matter when.
So
it's so long.
So let's break that down into.
Yeah.
So let's break that down into layman's terms. So like if I say I take an application, like say I come to your office today and say, hey, Kenneth, I want to buy this house. Here's my contract. Here's the sale price, whatever, blah blah blah. And you could literally give me those costs right now, and then I'm good to go as long as that doesn't change within a given tolerance at the end of the transition 30 days later.
That's correct. Yep. That's exactly right.
So I can satisfy CFPB today for a 30-day down the road closing is what you're saying.
Yes. Now, if you ask CFPB, they'll tell you. Yeah, but
right.
The problem. Yeah, exactly. What CFPB is promoting is, well, we should be able to close loans in 60 days or 90 days. Pardon me, 90 days. And I'm telling you, when they say stuff like that, and I'm not beating up on the CFPB, their timeline of when a closing should be done is 90 days. I'm telling you right now, that's not going to work for our industry. That's going to shut down the real estate market entirely
shut it
for
down,
everyone, regardless of where you're at. And so we just don't see that happening. But that's realistic turn times from CFPB's perspective. We believe that we can still close loans inside 30 days the majority of the time. Now, with that said, Scott, I'm not saying that the lenders aren't going to have, for the first 30 days as this thing rolls out after October 1, that we're not going to have challenges and a little bit of processes that we've got to tweak some things here and there. I know a lot of companies are going ahead and rolling this out September 1st to go ahead and kind of get the things down and kind of, do some tests within their organization. And we're going to go into a little bit more detail of how this looks from a title company's perspective and what this is going to look like at the end. But I just like to make the point every single time that the closing disclosure isn't any different. It's a different disclosure, but how that stuff is presented to the consumer, so long as the information doesn't change after the closing disclosure has been issued, we shouldn't see any problems. I just think that a lot of people are under the impression that we have to issue that closing disclosure 3 days before the actual closing date, and if we don't, then our closings are going to be delayed.
Not going to happen.
I don't think that's the case. No, I feel like that we're going to be able to issue those closing disclosures a week and a half to 2 weeks before we're supposed to close, and at that point, as long as your lenders are doing all of their due diligence and getting all of the information prior to issuing that final closing disclosure, nothing's going to change. It's not going to change.
Nothing will change.
Yeah,
so
relax.
what it sounds like is they're changing the terms, like they're not the terms. They're changing the what we call it. So it's going from a good faith to a LE, lending estimate or loan estimate or whatever. They're going from a 4-page to a 3-page. The 3-day deal really isn't like and I think everybody makes it out to be, like, okay, this has to be disclosed 3 days before closing, or it can't, like, then we have all these problems. But what you're saying is the actual start of the loan. I'm just trying to clarify this for everybody. So I guess what you're saying is nothing's really changing except for the terminology and some disclosures that have to be 3 days before. It could be 15 days before, 20 days before, 30 days before. It doesn't matter. As long as they get to the consumer 3 days before closing or sooner, nothing really is changing, is what you're saying.
That's correct. So long as your lender is doing all the due diligence and getting all the information that they need in a timely manner, and the realtors have to participate in this, the title companies have to participate in this, but it's important to know is that the CFPB has left, and this is Wells Fargo's deal. Wells Fargo has money and lobbyists to kind of bend the law to their favor, and so Wells Fargo is really ramrodding this change and wanting to take over this part of the industry, I guess. And so they were kind of the big advocate for it. We need to be able to do this and all of that. I can tell you right now, every lender that I've spoken with, I haven't had one person tell me, "Oh yeah, we're excited about this," because we're not. Wells Fargo, they originate less than 30% of the originations nationwide. It's the mortgage bankers and the mortgage brokers that are originating 80%, 70, 80% of the originations. Wells Fargo is just an example of a big servicer who has a lot of money, who has a lot of power. And so we see this happening in the industry, and we don't want it either. We don't want to have to be responsible for the seller's information and making sure that the title company fees are on there and all of that stuff. So there's been a lot of talk about the details of what that looks like, and we're going to go over that in just a minute. Okay, we're going to get there, but I just want to make it. I just want everyone to know, hey, we're not excited about it. We don't want all this extra responsibility, and we have privacy issues. I mean, there's a big conversation going on right now about privacy. How are the realtors going to get the information that they need to do their part? And I'll give you an example. Like the state of Texas is actually, TAR has come up with a form called, it's like an authorization form to release TILA and RESPA integrated disclosures. And what it is it gives it says something along the lines, and I don't have it in front of me, it says the borrower or the seller or buyer have entered into an exclusive agreement with the broker, and it'll like list all the brokers and the realtors' information. It just basically says, I hereby authorize you to disclose and furnish a copy of any of the loan estimates, the closing disclosures, settlement statements, anything in relation to your closing or involving the property that I need to do my job. And so that's an agreement between the real estate agent and the borrower and or the seller. And then most lenders you're going to see come up with their own form too, kind of as a CYA for them. And so there's going to be a lot of sharing of information, but man, there's also going to be a lot of lawsuits. And so, the realtors have to cover they have to cover themselves, and every state may have their own form, but the lenders have to cover themselves as well, because now we're sharing a lot of information that raises the question of privacy, and the privacy laws. And so it just hasn't been addressed yet to the level of exactly how things are going to be done, and it's just so new that people are still talking about it. But we'll go into that, and if somebody's got questions on that, we'll move forward. But anyway,
and
so
Kenneth, I guess the question is like, when's it starting? And I supposedly right now it's October 3rd, but October 3rd is a Saturday. I think what you're going to see is a lot of lenders are putting this into place as we speak. And I know that I don't know if you are, Kenneth, but I know that we're moving forward with it like right now, so that when October 3rd comes, it probably isn't. You probably won't even notice a difference. And I would assume that most places are doing that. Now I did hear yesterday there is something in the House that's trying to push it to February, but I think most people are just going to put this in place and just be ready, because it's going to happen. It's just a matter of when.
Yeah, it's better just to go ahead and let's get it done. October. I've been telling everyone October 1st. It is legally the 3rd, and I'm just assuming that they're going to start it on the 4th. Keep this in mind. If you have a sales contract that is already it's already been executed, those are actually going to be grandfathered in under the previous standards and laws and all that. But if you have a sales contract that is executed, and they're going to go off the execution date of the contract. If the contract was executed after October 3rd, then obviously it's going to go under the new disclosures and all of that moving forward. So just FYI for everyone to know that. So the next, so this is basically what we've already talked about. What's changing. We do have a 10% tolerance. We'll go ahead and skip that one.
Okay.
So the closing disclosures. All right.
So that was a question. So it's a 10% tolerance. Everybody, there was a bunch of people asking that question. So it's 10%. And we'll make sure, if you guys want a copy of this PowerPoint, just contact the loan professional that sent you here, and we'll make sure and get you a copy. And we'll also get the recording posted as well if you'd like to share it with your team or other real estate agents or whatever you want to do with it. So.
Right, and there are fees, and I would encourage you to get with your lender, but there is a list of fees that are allowed to change, okay? That aren't part of the fees that can't exceed that 10% charge. But keep something else in mind too. The APR cannot change more than 8%, okay?
An 8.
Now,
okay.
Yeah, an 8%. So the current rule is that if it goes up or down, even if it benefits the borrower, right, and it goes down at 8%, then we have to reissue a good faith estimate until. It's a silly law. It doesn't even make sense. I'm benefiting my borrower, but I have to redisclose and then wait 3 days to close. Because a lot of people, guys, we have to redisclose the truth of lending in the good faith estimate today, and we have to do it 3 days prior to closing. It's nothing different than what we're going to be doing.
Okay, sense? Got it. Yeah, it doesn't make sense.
So just a different form, and so the new rule, if it goes down an 8%, we don't have to redisclose, which that was a big argument with CFPB, or a debate. It wasn't an argument. It was more of a debate on whether they should keep that or do away with it, and they agreed that since it was benefiting the borrower and it goes down, we don't have to redisclose. So that's actually pretty good, because, man, I'm going to tell you, that happens more times to none in our business, because rates may shift. If someone didn't lock a loan and rates drop down, and you redisclose them a higher rate, and you're able to give them an 8% or a 1/4% lower on the interest rate, then obviously, but you don't want to affect the closing. I know for a fact that that's happened where the consumer didn't get the lower rate just because they didn't want the delayed closing. So
that's true. Okay. Yeah, that's a good point.
Yeah. So moving forward, the old closing disclosure. So the current process is we have the title company is responsible, or the settlement agent is responsible for preparing the final HUD. Okay, this is the current process. The final HUD contains all the borrower and seller details, and then the borrower may request the HUD 1 day before closing, and that's all today. What's changing is that the lender is responsible, okay, for the closing disclosure, okay, including any and all revisions. Now, I can tell you right now that we do not want to be part of solely 100% responsible for that closing disclosure. Now, there are lenders out there such as Wells Fargo, and I'm not beating up on Wells Fargo, Scott, or talking ugly about them. They have a different way. They want 100% control over what they do, okay? And the majority of the market out there, from the people that I've spoken to, that's not the case for them. So what we envision is this, okay? There's 5 or 6 third-party softwares that are out there, okay? And we're talking different companies, even some of them one of them's owned by Wells Fargo. Think about that for a minute. You with me?
Yep.
Okay.
Yep.
These third-party companies are out there, and Wells Fargo and somebody else, I think, jointly own like one of the biggest ones. And so these third-party softwares is this. You have the lender who has the software, and then you have the title company using the same software. And the title companies may be set up with all 5, 6, 7 softwares that are available, and this is how we envision it, okay? I have a username and password as a lender. The title company has a username and password, and we have to be able to trade information without having to use email or phone. Does that make sense? Because if we're sitting there emailing and using phone, and me as the lender trying to gather all this information, I need the seller's payoff. Well, I don't want to mess with that. Why don't we just traditionally let the title company handle that? And keep in mind, this is lender discretion, and it's going to be different from one lender to the next lender to the next lender. And that's why it's important to find you a local lender. Find a local lender that you like, know, and trust. Get with them now. Have a meeting with them, and figure out coffee, lunch, something, and figure out how they're doing it, so you can set yourself up and understand, from a realtor's perspective, what do I need to do to have a successful transaction. But this is what we're going to see. This is what we envision. We want the title company to plug in their fees. I don't know what the title company fees are, and I don't want to have any, as a lender, I don't want to have anything to do with their fees, nor be responsible for them. So there are certain sections of this closing disclosure that the lenders will decide what they will do versus what they're going to allow the title company to do. Now, instead of us talking by phone and email, why don't we each have a username and password to access this account, and I'll use my traditional software to process the loan like we traditionally will, and it syncs with that software, and then the title company syncs it up with their information, and they can go get the payoffs, and they can get with the realtor to get the the home warranty information or whatever it is that we need, and we get that in there just as quickly as we can. We can't wait 2 or 3 days before closing. We have to do this information the first 2 weeks of the transaction so we can issue that closing disclosure and get it done. Does that make sense to you, how I just explained that?
It does. It does totally make sense. Yeah, and we'll answer some questions at the end just to kind of clarify, because I think people are asking the same question. So I want to get through it and make sure we get through everything, and then we'll kind of dive back into what, like, some of the questions that people are asking, that what you just covered, because you're covering a lot of it as we go along. A lot of the questions. Yeah.
I know. Yeah, I know I am. Look at it this way. It's the same process that we've always done, chronologically in a different order with some new forms added. Make sense?
There you go.
So things that the title company would normally do, they got the lender doing. Things that the lender would normally do, maybe the realtor's doing, and vice versa. And so it's the same process, it's just in a different order. And so we have to kind of like pause for a minute and say, okay, who's doing what and how quick do you need it? That's what we need. And and there's just a lot of stuff, like the payoff, the title company fees, the home inspection, the pest inspection. If that stuff is being done, you need to get it over to your lender, and we need to make sure that it's paid. That if it's not paid for, that the lender knows it's not paid for. And so we just have to do things a little bit faster on the front end, so we have a smoother process on the back end. Okay.
Right.
Now the closing disclosure. Just are there going to be circumstances that come up in our lending world that require us to redisclose and then have to wait 3 days? Absolutely, that's going to happen.
Absolutely.
There's going to be circumstances where a loan program changes, something's going to happen. A lot of times it's circumstantial, I think, if you have a good lender. I like to say we close 90 to 95% of our loans on time every time, but there's some times that we can't because of circumstances that are beyond everybody's control. It's just, it's just a circumstance, that we don't have any control over. But when the closing disclosure is issued, you issue it. It's 3 days, and if Saturday does count, okay, so Saturday does count. So if you issued it on a Thursday, Friday, Saturday, and Monday, you could close on Tuesday. Okay, I just want to make sure we touch base on that. And if for some reason something else changes again, you have to wait 24 hours before a new closing disclosure can be submitted. But again, I don't want that to be like the focus on from a realtor's perspective.
So Saturday's a business day. That's cool that they allowed that at least.
Yeah, and they almost didn't. That was another debate that they had whether or not we should do that or not. So we went over the closing disclosure stuff. We'll go. I already talked about the APR increase, and so we'll move on to the next one.
APR, okay, cool.
What CFPB website for lists of cannot increase? Okay, so we've kind of already talked about certain fees that a borrower cannot shop for, such as an appraisal fee, have a 10% tolerance. Okay, let's move on to the next one where it says what realtors need to know about TRID. You certainly need to be able to explain the new disclosures. I know for what me and a lot of my mortgage buddies have come up with a form, and I'm actually giving it on a local market to my local realtors, and it's basically just a form explaining the law, what's changed, why it's changed, and expect delays. Right? It's better to go ahead and tell your buyer and or your seller up front, hey, we're having some industry changes. Here's a form. I want you to sign it. And the one that we created for our local market, and this is something I can share, Scotty, if we want to get it out to awesome. our mortgage partners or whatever. But it basically has the buyer sell it, it has the buyer sign it, it has both realtors sign it. If there's two realtors involved, it has the seller sign it, and it has the loan originator sign it. And the reason we do that is we're just setting up expectations. We're not saying that we're not going to close on time. We're just saying, hey guys, we need to educate our consumer market. We need to educate in our communities. We need to let people know, hey, we've got a big change coming. There could be delays. Okay, it's just.
Yeah, I was going to say you're just more or less setting the expectations, and you're having them sign them so that they do recognize and acknowledge the changes that are taking place on all levels. So more or less, instead of just saying it, going, here's what's happening, you're actually going, hey, please read this and accept it and sign it, right? I mean, that's really what this boils down to, which I think expectations is everything. Nobody gets upset at a closing if everybody's on the same page. It's when surprises happen. I think everybody on this call would agree with me, and there's a lot of people here, is when you're not updated on a weekly basis, daily basis, when there's changes taking place or something happens where you can't hit that closing date. I think it's just setting the right expectations and letting everybody know so you don't have a moving truck sitting in the parking lot on Friday at 5 o'clock and you can't close, you know? We've all been there.
Yeah, we've heard, and we've heard some of the, like some of the bigger lenders and some of the online lenders, and I'm not trying to beat them up either, but their processes are going to be completely different than what it's going to be for that 80% of originators out there originating 80% of the business. It's just going to be completely different. So I can't stress enough that you need to get a local lender on the phone and figure out what their process is going to be. And I know realtors can't steer people away, but they might want to educate them to find a local lender and give them give them a good, a good reason behind it. Hey, we've got some industry changes. Some of these bigger lenders are doing things a little bit different, and they are. And I don't want to get into any scare tactics here, but like Wells Fargo, they have a couple of floors of people that are going to be making these changes, and they're just not going to have the same urgency as a lender is going to have locally. Okay, that's basically what you're going to see. So most lenders will be providing the final closing disclosure. That's true. Okay, we want to issue that closing disclosure as quickly as we possibly can. We don't have to wait till the third day, and all that before closing to get that done. But we want to make sure it's being done, when the file is either approved in underwriting, or just a couple of days after that, because nothing should change. By then, you should be able to have all your information to be able to issue that. Escrow will no longer be responsible for providing this to the borrower. Let's talk about the elephant in the room, Scott.
Yep.
So there's two things, okay? The sales contract has a closing date on it, and that closing date says it's on or before this day. Now that agreement is between the buyer and the seller, right? So that's the contract that we're looking to close. The first thing I want to say is after October 3rd, it would probably be beneficial for all agents to write contracts for 45 days just to be on the safe side, okay? Write your contracts for 45 days, at least for the first couple of months until you feel comfortable. It doesn't mean that you can't close sooner. It just means that you're setting up expectations. The second thing I want them to understand is that contract date is between the buyer and the seller. That the lender's not responsible to close by that closing date, although your lender wants to, but that's the agreement. And with these changes in place, we just need to be communicating with these lenders, letting them know, or the lenders need to be communicating with the realtors as well, that if we're not going to be able to make that closing date, let's not make it a day before. Let's not tell everybody 2 or 3 days before. Let's tell them a week and a half in advance, 2 weeks, so we can set up proper expectations to push this back for whatever reason. The other point I was wanting to make is the elephant in the room. When these contracts are written, a lot of times we've seen the real estate agents and maybe even the seller, at least in my market, kind of have ownership of where that goes, what title company is being used. Well, that's not really the case anymore. We're going to see a lot of the lenders have more influence over which title company is used. Okay, because they're the ones, the relationship now.
Have the relationship and that would make more sense. Because otherwise it could get bumpy at the end when you got two title companies, a split closing, buyer side, seller side. That could get crazy. Mm-hmm. I 100% agree there.
Let me give you an example. If I get a contract with a closing company that I'm not really set up to do business with yet, and there's 2 or 3 of them out there that I'm not set up to do business with, I've got a title company. If the contract's written for another title company, my relationship is still with this title company because we have a system and we have a process in order to get our loans closed in a very efficient and timely manner. Make sense? That I'm going to send that contract to them and let them order the title work on my behalf. Make sense? To that other title company.
Absolutely.
So that's like another little loophole that we're going to see. But I just think that a lot of these out-of-the-area lenders aren't going to have the processes set up on the local level to maintain efficiency and on-time closings, at least for the first 60 days. I just don't see it happening. I'm not.
It's going to be a while.
Yeah. So the timing of those closing disclosures is important, and like I said, local people. Let me see here what else I'm missing. If there are any changes after the closing disclosure is delivered that do not affect the APR or loan product, there is no additional wait period. The revised CD can be given. Yeah, and that's accurate.
Yeah.
Here's some questions what you should ask a mortgage advisor like me. Listing agent, has the borrower given their intent to proceed? If not, they have not selected their lender. They have 10 days to express their intent. So the way we do it is when we get a sales contract, we have our borrowers within 24 to 48 hours sign that intent to proceed and basically move forward with the transaction. But that intent to proceed is interpreted a little differently from banks to mortgage companies. So everyone interprets that law a little bit different. But a lot of the banking people that I know here in Texas and the local market is they require that intent to proceed before they even take an application from them. You know, name, social, all that stuff. We don't do that. We do the intent to proceed when they find a house and have a contract on, and we have that done as quickly as possible. The selling agent confirmed that the borrower has expressed their intent to proceed, and that we have credit card information. That's something else to order the appraisal. So we get the credit card information as soon as they find a house. When they come in and sign their intent to proceed, get the credit card information to go ahead and order that appraisal, because once we get that contract, we're ordering the appraisal within 24 hours, sometimes 48 worst case scenario. Listing agent makes the escrow lender has all of their fees. That's huge, man. The listing agent has to make sure that they've got, and the buyer and the selling agent too, both of them, we have to get with the title companies and the lenders immediately, depending on how their process is. Let me give you an example. Home warranty. Was there a home warranty?
Right.
There's one contract where we need that home warranty. Yep, 300, 400, 450. I can tell you what we're doing, okay? And this is something you might want to give your lenders this idea. We're actually going to find out what home warranty companies that our realtors like to use, and we're going to put it into our database. And every realtor will have a home warranty company assigned to them, and we're going to order the home warranties on behalf of the realtors. And the way we're going to do it is we just click a box, and it sends the realtor and the home warranty company an email at the same time requesting the home warranty. And so it's executed, like the communication's been done, and then the realtor can hit reply all, and it sends the realtor a text too saying, hey, we just ordered your home warranty for you. And then if there's any changes or anything that needs to be communicated, the realtor can take that text or that email and say, oh, we changed it from 350 to 450, or hey, I'm going to pay the additional amount, or whatever the case is, whatever it is. So that's just an idea that we came up with that we're going to do for our realtor partners.
So more or less just assume it. So more or less just assume some of these things and then discount them at the, like take them off at the end if you don't do them.
Exactly. Yeah.
Just so, because if you go down, there's no new CD is what I'm hearing, right? So if I say home inspection, pest inspection, whatever, and then I go, whoop, we didn't do a home inspection, we didn't do a pest inspection, take those off, that's better for the borrower, which means no new CD.
That's correct. Well, yeah. Okay. Well, and most lenders aren't going to disclose it unless it's an actual item that they're going to need. I know most lenders don't put home inspection on the actual, or even the pest inspection. Some do. It's just a preference. I prefer not to put those two things on there. I like to have those paid outside of closing, especially if it's not required. Now, a pest inspection is required on a VA loan, but it's not required, and I don't like our underwriters to get to see that information because it could sometimes open up a can of worms, and we just prefer to do it that way. So most lenders aren't going to put anything on a closing disclosure if it's not the reality. That's what the loan estimate's for. The loan estimate is an estimate until I get all the facts, get all my stuff from the title company, get all my information from the realtors on the transaction. Let's get it into the software. Let's issue that closing disclosure as quickly as we can.
Here's a great question I want to take right here. Jay, I appreciate you saying this. So if there's a repair to be done or a home warranty being changed, and it does not affect the APR loan program, can they be added or changed after the CD has been issued?
So the right answer for me is I don't know, but I'm pretty sure that if it doesn't change, I know for sure if it's not an APR fee, then it's okay. So yeah, so he's right in that regard. I'm pretty sure that he's right in that regard.
Okay.
If it doesn't, if it's not an APR change, it wouldn't be an issue.
All right. Awesome.
Okay, but it's definitely something that, got to keep in mind, like, man, we've got to, they want me as a lender, they want us as lenders to be responsible for the realtor commissions, right? Well, we know that I've seen realtor commissions change and be updated, man, all the time. And if we're issuing a closing disclosure on behalf of a seller, who am I to issue that closing disclosure without talking to the realtors and having the accurate information to issue that accurately? You know what I mean? And so, yeah, and they're allowing for a closing disclosure to be issued for the buyer and then a closing disclosure to be issued to the seller. Most companies aren't going to do it unless the state mandates them to issue separately. Why, I don't know, but we're going to probably see most of them still issued on one closing disclosure. So.
Okay. So these are a couple things that are exempt from the new TRID.
Yeah, home equity.
As of right now, as of today. Yeah.
As of right now, yeah, they don't apply reverse mortgages, mobile homes, commercial loans, and anything that's kind of a unique property. You know, a houseboat or something like that. So.
Cool.
And then on the next one, it just says what realtors need to know about TRID. After the closing disclosure is issued, try not to change anything. If you do change something, notify the escrow and lender immediately so we can make sure that we issue a new closing disclosure if it is something that's going to affect the numbers that we need to have accurately on the closing disclosure. Definition of business days, we talked about. The Saturday does count.
Yep.
Means all calendar days except for Sundays and legal public holidays. And so, not that would come up, but it may, you know. So these holidays are something that we have to take into account as well when those come to pass. Now, let's look real quick, and again, I can't encourage everyone on the call to Google the loan estimate and the loan disclosure, or just get a copy of this PowerPoint. But if you look at the loan estimate on the next page, Scott, let's look through this, because this is really a good thing. It has the loan estimate titled, and it has the borrower's information. The loan amount is there, the interest rate, the monthly principal and interest. It has prepayment penalty. Well, who would have thought of that? Yes or no?
Right,
you know,
right.
For prepayment penalty, is there a balloon payment? Yes or no? You know, and then it has the projected payments. Well, it says what the payments, the principal and interest, the mortgage insurance, estimated escrow, and then what the total estimated payment is. Guys, I can't emphasize. Do you know how clear that is compared to what we disclosed to them now?
Oh my God, that's amazing. Yeah.
It's a lot, so much easier. And then you can actually show them. See, the 1 to 7 years has what their payment is, $1,050. And then you have the years 8 to 30. What drops off predominantly mortgage
the
insurance.
MI, the mortgage insurance drops.
A conventional loan is going to fall off after about 7 years.
Nice.
So it's telling them what their new payment's going to be. It separates the escrows, the property taxes, and the insurance, and it has the estimated closing costs. But this is phenomenal for me. Includes $5,600 in loan costs, and this is just a CFPB example. This isn't my example or anyone else's example. This is just what they've written up for themselves, and then $2,300 in other costs, such as more likely the prepaids. And then estimated cash to close. It has the total estimated cash to close. And you go on to the next page, and then it just breaks everything down into all the details that every consumer will see. Yeah. And it's bullet point. It's organized. It has the origination charges. Okay. It has the services you cannot shop for, or that you can shop, and then the services you can shop for. Okay. And then it has taxes and other government fees. It has the prepaids. Initial escrow payment at closing. It breaks it out separately. And then it's just easier on the eyes from a consumer standpoint.
It is easy, yeah. It's really nice on the eye, yeah. Right on.
So this
and then again, it breaks down your, this is awesome.
Yeah. So this is what the lenders are going to be sharing. And look on the next page, man. This is what I was talking about earlier. It has a comparison. Hey, in 5 years, you're going to pay $56,582 in principal, interest, and mortgage insurance. Well, check this out. You're only going to pay $15,000 in principal, right? So this is good for a selling agent or a listing agent who's about to list a property, and the people live in their house for 5 years, and they think that they can sell it for $50,000 more than what they bought for it. And you know, this is a good tool for them to know. So hey, after 5 years, you know, in this scenario, you pay down.
It's going to cost you $56,000. Yeah, right. Yeah. You guys catch that? I don't know if everybody caught that, because I know we've been talking about TRID, but this is a great thing that you can use as a real estate agent when you're looking to help people sell their home and talk to them about what their home is worth and what they've paid and what they haven't paid, or what's went towards principal and what hasn't went towards principal. So that's a great thing, yeah.
Annual percentage rate, that's a big thing in the consumer market. They don't know what it means, and it says right there in black and white, this is not your interest rate. And then it has total interest percentage. So this example says that the consumer, the buyer of this house, paying 69.45% in interest. It's true.
Wow.
You know, that's what they pay. And so it's just, you know, it's just really, and then it breaks down some of these other things that's important too. Lets them know that the servicing is going to be sold more than likely. If it's a refinance, it says that if your payment's more than 15 days late, you know, the loan requires homeowners insurance, all that stuff's in there. And then it lets them sign it at the bottom. This is the first time since I've been in the business where they have a form that has all the, like the good faith estimate and the TIL that we have today, the most important forms in the package. And guess what? There's no signature line on them. I mean, it's the
I know, there's nothing. You just flip through it. You just flip through it. Oh, okay, sign over here on a blank page.
Yeah, exactly. And then we go into the closing disclosure, and this is what the realtors are going to see. This is what we're going to have at the closing table. This is something that we're going to be all looking at, and it's real similar to the loan estimate. Okay, it's got a little bit more detailed information in there. The first page is predominantly the same as the loan estimate, but if you go to the second page.
Oh, here we go. Okay, so you're going to get this at closing, this right here, which will, okay, and then this will be at closing. Okay, cool. All right.
Yeah. And then you'll have the buyer side, and then you'll have the seller side. And again, we don't need to go over every single line today, Scott, for time purposes. But I want to leave a couple of minutes for any questions. But if you look through here, you can kind of see how it's very similar to a HUD. It's just more organized. And it's in alphabetical order, according to each section is in alphabetical order. And so they break it down in like subcategories, and then it's alphabetical order. So remember the old HUD, the current HUD shows number lines, like it's 800s and 1,000, 1,300, all that. All those numbers are gone. We will no longer use those. So it will be A, B, C, E, F, G. Hey, section H under other costs, you know, number 4.
Very nice.
You know, yeah.
Very nice.
So they can change that, and then you just go through here and look at it. I mean, I think it's
pretty much the same, yeah. Yeah, it's a great thing, yeah. It looks good.
It's great. It has more detailed information. And then the very last page, I always like to point this out because it's really to me, this is something that we all get to benefit from, regardless of what side of the transaction you're on, is the contact information. Has the lender, the real estate broker, okay, and then the settlement agent on this last page that we all get to keep. You know, as the consumers get to keep it, I get to keep it as the lender, the agents get to keep it, but it has all of that information for us to be able to talk or communicate after the sale. Okay, so a lot of times consumer can go back and pull this form and say, oh, I can't remember who that other realtor was on the transaction. And sometimes they say, heck, I can't remember who my realtor was for that, or my lender for that matter. They can
awesome.
Come back here and they can pull that
information. It's all on here.
And have it. Well, yeah, so it's just kind of a neat little thing. So,
well, shoot, if it was me as an agent, or a lender, I would be sending them this, like, hey, just want to send you just for tax reasons, you know, because, like, that's a tax thing. When you're buying or refining a house or whatever, then it has the realtor information on there, of course. Now they remember you for sending it. Not only it's on the information, so they have it in front of them again. So great reason to make a phone call as well. Yeah. Awesome, brother. So, dude, this is good. Let's answer some questions here before we get off this call. And let's see. So, is there? Okay. Let's see. How does the? This is a good question. Thanks, Jack. Appreciate you being here. How does the lender estimate insurance? How do they know they will be within 10% of actual? Would we be better off to get actual quote? Great question, Jack.
Yeah. Okay. So. So traditionally, on the loan estimate, we're estimating what it is, and then when the loan estimate, they're signing all their other loan disclosures. As soon as it hits my processing, which is within 24 hours, they go into our system. And I want to be very clear about this. You have to find a lender that has some phenomenal processes and systems. My processing team virtually goes in and just clicks 4 buttons, Scott, and it orders insurance from 4 different insurance providers. It emails the insurance agent and the borrower because man, some borrowers don't know who they're using, and some of them already know who they're using. So when we meet with a client on the front end, that's the first thing that we need. Hey, do you know who you're using for insurance? If they say yes, who is it? And we plug in their information and we get a quote from them. I need you to get a quote from them immediately, as soon as you can. And when they drag their feet, my team's in there asking for it within 48 hours. If they say, we don't know who we're using, do you mind if I help you shop for that? I've got 4 people. You can use whoever you want because we haven't signed a disclosure letting them know that they can use whoever they want. and then they basically say, yes, help me shop for insurance, and then those four insurance companies will just call them and try to quote their insurance. Once they get the quotes, they send them to my office, but the loan estimate is just estimating it to go ahead and get the file into processing, and then we'll update it before we issue the closing disclosure. We're going to have insurance. Who you use insurance? I'm going to know that before we issue that closing disclosure. And most lenders, I think, not all of them, but I mean, we all know there's a lot of knuckleheads out there, but I think that there's a lot of good professionals and lenders out there that will hopefully have a process in place to get that done up front.
Cool. And Jay, I appreciate you saying this. Just so you guys know, make sure that they know the 69% in interest is divided over 30 years. So just wanted to clarify that. So DS is saying, so you're saying you're helping your agents by paying for the home warranty up front for them. No, we're not paying up front. We're just putting it as a cost on there if it's being done, I would assume, right? I don't know if I'm saying that right. So it's not that it's being paid for. It's just that if you don't have the cost in there and then you add the cost after the CD goes out, the CD has to be redone, I would assume. Is that kind of?
That's correct.
So you're being proactive on it. So you're being proactive. Okay.
That's exactly right, because realtors know this. They've sometimes they forget to put. I've seen them forget to put it in there, negotiate it after the fact because repairs or something came up. Well, we want a home warranty now. Okay, things change, man. We know that, and all we're saying is lenders, when those things change, we need to know up front, and we need it ASAP, because just because you put $350 on the contract. Maybe the realtor wants to. Maybe they had a verbal agreement with their buyer to pay $450 for one. I don't know. There's a thousand different scenarios we've seen. We just want to go ahead and get it ordered. I want the receipt. I want to know exactly, as a lender, I want to know exactly what that invoice is going to be, so we have it ahead of time and we're not waiting till the very end, because that's fine. The way that we've done it, that's the way we do it, man. I've seen order the home warranty the day of closing. Oh yeah, I need to get that ordered. And they do it the day up.
Right. It's not good.
Yeah. And that's fine. I mean, that's how we've always done it. And nothing wrong with it. But under the new change, then we need to go ahead and have that. We need to have that done like probably the first 2 weeks tops. We can ask.
Here's a question from J40. Says, is the home warranty an APR fee? Which I believe I don't know how to answer that.
I'm pretty sure it's not. I'm 99.9% certain that it's. But I'll have to look at my list. I don't have it in front of me. I should have probably printed it off, but I didn't. But no, I don't believe it is.
Hey, Susie, more than welcome there, my friend. Appreciate you being here. Hey, Megan, awesome. Thanks for being here. Great lady out of Pennsylvania. She says, we have times that appraisal management companies come back and state an appraisal will be 50 to 100 more than the normal amount listed in the appraisal cost chart. With this being no tolerance, how can lenders deal with this?
I've never known an appraiser to come back and charge an extra fee. No, I'm just kidding. I'm lying. They're horrible. It happens all the time.
Hey, I believed you, man.
Yeah.
I was like, dang, dude, really?
Yeah. Well, whenever an appraisal has been ordered, it's a third-party person, through our ANCs that are ordering those. We're having those paid. We're not having those paid on the settlement statement. Those are things that are being paid outside of closing. Probably 95% of the time, with most mortgage lenders and bankers out there, they're collecting that and it's paid. It's never paid on the HUD anyway. It's always something that's paid outside of closing. So
okay.
Yeah. So I don't know. Yeah, I don't know that it just doesn't become a tolerance situation for us, because they, a lot of times they'll come back out and they have to do a reinspection. Well, that's another $50 to $150 depending on what they're doing.
Yeah.
So that's just a moving target sometimes.
Another question, Donna. Appreciate you being here. It says, does the buyer and seller not sign this document like they currently do? I think that was. I think it's signed. I think what you're talking about. Whoops. Right here, I think is what you're talking about. They actually, here's the applicant's signature. Or are you talking about the HUD? I'm not sure. But on the HUD, of course, everybody would sign that. Which,
on the HUD,
applicant, co-applicant, and then, we just don't have that part there. But, the buyer and seller are both going to sign that at the end, of course. Yep, for sure. The PowerPoint will be available. It'll be up on the recording page. Just contact the loan professional that sent you here. If you're not getting it, let me know on the Facebook page is facebook.com/groups/. agent mastermind. We're all part of the group there, and it's over 15,000 and growing. If you're not there, there's just a ton of great activity and questions and input. And I really appreciate everybody that does participate in there and answering the questions and giving your input on that. It's just a great place to be. So I do monitor that pretty heavily. So if anybody's selling anything or trying to promote anything, it's not for that. It's not for listings. It's true trying to help people to have a better real estate business. So just keep it clean as far as that goes, or you will be banned from the page. Kenneth, man, I think we covered all this stuff. So, guys, we'll keep you updated on the Agent Mastermind private Facebook group as this transpires and what happens. And just know that, man, you said it several times, Kenneth, and the one thing I kept writing down was build a relationship with a lender that you know is proactive and sets proper expectations. If you're on the same page and everybody knows what's coming down the line, what's going to happen, everybody's going to be happy. Closing should be a celebration, not a rush and oh crap or whatever. It should be a celebration. If everybody's up front and on the same page, that's what happens. It's a celebration. So I can't stress enough is to build deep relationships with your lender. Make sure that they're putting stuff into effect that's that's proactive. They're not just waiting till the last minute to do this. I think everybody that I've talked to is being very proactive on this. It is going to be a change that's the same for everybody. So you're just going to have to work through it and know that it's just going to be a change. It's just, and obviously, I don't know about you guys, but I love change because it does make it difficult for your competition. So I don't know if I maybe said that right or maybe that was a little greedy, but change is good for the industry. And so just be prepared for it, welcome it, and just do stuff proactive to make it a benefit to you. So, Kenneth, any final words, man?
No, man, I think you said it all. The sky's not falling, man. I can't emphasize that enough. Good lender, man. Yeah, it's going to be fine. Right. I know we don't like, and I agree with you, man. We don't like change, but it is an opportunity
right.
to.
It is. Yep.
It's a great opportunity for us, and you know what? At the end of the day, it's all to benefit the consumer, and I'm a big advocate.
Absolutely.
For and what's best for them, and if we can be better for them, let's do it, man.
Yeah, and my final word, Kenneth, if you guys, like, who on this call would like 1 or 2 or 3 more deals on their plate in the next 90 days? Anybody? Anybody want to raise their hand? Say yes if you do, and I'll tell you exactly how to do it. Nobody says it, I won't tell you. I'm just joking. So, guys, get a copy of your database and call them and tell them what's coming down. Say, hey, I just want to let you know that this is what is happening. Put it in a layman's format and just say, hey, I just want to call and update you. There's some changes going on in the industry. If you're thinking about buying, I've had some training on it. I know what's going down. If you know any friends, family, coworkers that are thinking about buying or selling, get with me because I want them to know. I don't want them to get stuck in what's happening in October and whenever it happens. It's a great way to reconnect. It's a great way to introduce yourself back into your past database life. And I'm telling you, if you ask for the business, and you say, who do you know that's thinking about buying or selling, you will have leads coming in your door because NRA, National Association of Realtors, says 86% of the people that know, like, and trust you would refer you only if they remembered you. The problem is they don't remember you. So this is a great industry thing going on where you can pick up the phone. Don't be scared of it. Call them. If they hang up on you, so what? Nothing bad happens. Pick up the phone and call the rest and ask for the business. I'm telling you, you will have 1, 2, 3. I mean, depending on how big your database is, we're seeing 1 to 3 per 100 in our database of referrals from people in the database. So it's a great way, great situation, great conversation piece, just to let people know, hey, the industry's changing for the better for them to help protect them and walk through it with them. And they would welcome that phone call and be more than happy to refer their friends, family, and coworkers. So did that come across okay, Kenneth?
Yeah, that was awesome, man. Yep.
All right, brother. So
you're awesome, Scott.
I appreciate you, man. I appreciate you, brother. I appreciate you taking the time and learning this stuff because I had no clue. I keep hearing it, but it was just not what I do, man. And that's, you know, you're the expert, and I appreciate you diving into this. I know you're doing some CE classes on this down the road, and so if you're anywhere in the Longview area, Texas, get a hold of Kenneth Travis. He does CE classes and wealth of knowledge, and not only a wealth of knowledge, but he has a ton of fun. He'll have you guys up dancing and singing, and you don't know who he's going to come in as. He dresses up. So he's just a good dude, man. So I appreciate what you do for our industry, and I appreciate the fun you bring into my life and everybody that you're around. It's just an honor having you as a friend, man. So I appreciate you taking time out to do this today.
Thank you, buddy. Likewise.
Thanks, man. Take care, everybody. I'll see you guys same time, same place, right here on Agent Mastermind. Appreciate you guys. Honored to be a part of your life, and we'll see you on the web. Take care, everybody. Bye-bye.